Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
I'm Whitney, host of the Real Estate Syndication Show. Every day, I'm interviewing experts that will help you to successfully invest in or grow your syndication business. Hit the like and subscribe button so you'll be on track to learn from the best in the industry. This is your daily Real Estate Syndication Show. I'm your host, Whitney Sewell. Today, our guest is Nick Earls and Eric DiNicola. Nick and Eric are full-time real estate investors, developers, and founders of Winterspring Capital, a private equity firm based out of Boston, Massachusetts. Since starting their company, Nick and Eric have owned or developed over $56 million of multifamily assets with additional $40 million currently ongoing developments in the pipeline. Nick and Eric focus on several different types of multifamily investments, from value-add 100-plus unit complexes in the Southeast that they syndicate alongside their investor base to affordable housing developments to luxury multifamily condominium developments. And Nick and Eric have a unique partnership. They've known each other for 20 plus years. We go into that a little bit and some things about their partnership, but really how they noticed an opportunity and how they seized that opportunity and move forward. I mean, they were knee deep in their first project when it was rejected by the local town. And so just some great pointers around this when that happens, but also, and they pointed out how much profit can be had when you're willing to overcome these barriers. And so I know you're going to be encouraged and motivated and learn a lot from Nick and Eric. Nick, Eric, welcome to the show. Honored to have you guys on. And I look forward to hearing more about this niche that you all are in. I think it's unique compared to most of the conversations we have on the show. And so I'm just looking forward to learning from you really and how you have, before the show, you were talking about, there's a lot of profits to be had if you can overcome these barriers. And so looking forward to you helping myself and the listeners also in doing that exact thing. Tell us a little bit about both of you, your partnership and maybe how you met, but then, how you got into this business as well, this real estate thing that we call syndication or, commercial real estate.
Yeah, absolutely. Thanks for having us on. Eric and I have been friends for almost 20 years now, been friends since we were kids, actually. Went to high school together, kind of always had a little bit of rebellious or independent streak, didn't want to work for the man, wanted to kind of forge our own destiny. Went our separate ways for college, but we still kind of had that idea, hey, let's start a business someday. And we were saving up money for a couple of years because I got my real estate license 2011. So I started kind of get into the industry and I was selling smaller apartment buildings. So I was on the commercial side and I understood, hey, if you buy enough of these, you can have passive income. And at that point, I didn't know too much about investors, but I just had this idea, what if we save up some money and start buying rental properties? So we're doing that for a couple of years. And in 2015, we had saved up a decent chunk of money after 4 or 5 years. And I saw an opportunity not in buying a rental, but in the condominium market in Boston. Very strong market. Basically, you're building from the ground up or converting existing structures, usually a two-family, like a duplex or a triple-decker. And then as years went on, we started to do bigger projects. We got started with that and you sell them at the end to a homeowner and you can make a lot of profit with projects like that. And we've been doing it ever since. So
you all knew each other for 20 years and, you started a business now. Tell me, how did you all know that? Maybe you can help the listeners because this is always a question I get about partnerships, right? Well, how'd you all know that this was going to be a good fit? I know you all knew each other for 20 years, but does that always mean it's a good fit? Or were there anything, around that was like, you know what? I know this is going to work out because of this thing.
I think with Nick and I, we had our group of friends in high school. We kind of similar personalities. We played football, did powerlifting, played video games. World of Warcraft was something we played back then at the end of high school, and we just had a good sense of working together. And we had very similar values. And as Nick said, kind of had a rebellious streak. Not that we were sort of jerks to authority or anything like that. It was just, we wanted to kind of do things our own way. And we had an idea of how we wanted our life to end up. It was sort of both very similar. Even before we had families, we kind of said, look, we grew up, we see what it's like to have a family, as kids, and we want to make sure, our families have permanent financial freedom. How do we make that happen? And it wasn't like it just clicked. We said, oh, it's real estate. It kind of took a little time. We realized a lot through Nick's experience at work selling those apartment buildings that he talked about. We kind of figured out this is the path. I mean, this allows us to not have to, work 8 to 5 every day. We end up like working more than that, it seems like, but it's not in that sort of capacity where you're just stuck in a cubicle the whole time working for someone else. There's a lot more uncertainty to it, which we knew kind of going in, or sort of knew, but I think it all just kind of worked out that we said, this is clearly the path. And we didn't butt heads on anything. And it was sort of a natural fit for our personalities and, our goals.
No, that's awesome. I mean, you mentioned numerous things there that you all were aligned on. Sounds like you knew each other very well. You'd spent a lot of time together growing up, and that's awesome. And actually, I think it's, you saw an opportunity there as well in each other, in making this happen. And so, Nick, you mentioned you saw an opportunity. You all saw an opportunity in the condominium market. What was that opportunity? How did you recognize that, being maybe new into real estate, newer, like how did you even recognize an opportunity like that? And then also have the confidence to move forward and make something happen?
So just because I was an agent, I was kind of vaguely familiar with the Boston market. I was selling kind of more in the suburbs, but we saw, I had access to MLS and everything. After the recession in 08, 09, Boston kind of very quickly kind of shrugged off that damage, especially in the condo market, and the prices just kept going up. So by 2011, 2012, there were developers making really good money in condos in Boston that might surprise some people in different parts of the country. So I kind of saw that, and it was just on an upwards trend. And I didn't fully understand the dynamics at the time, but what really is the cause of that is there's a lot of demand. Boston's one of the number one, I think, alongside San Francisco, the number one life sciences city in the country right now. And over the past 10, 15 years, there's been more and more companies, biotech, lots of laboratory facilities. Moderna, one of the vaccine producers, is headquartered in Cambridge, right outside of Boston. So a lot of high income workers moving into the city. Meanwhile, the zoning code is very restrictive. It's very outdated. And basically, you need special permission to build anything that would pencil and underwrite properly. So it's a very political process, lots of red tape. And just kind of we gradually learned that, okay, yeah, this process is pretty stressful, and you got to have neighbors throwing tomatoes at you and kiss a politician's feet and all this nonsense. But if you're willing to do all that, you can get some good projects approved and make a lot of money because there is a lot of demand there. It's high income workers, and there's not much being built because of all these barriers. So we kind of gradually figured that out. I wouldn't say we knew all that on our first project, but what we saw was a neighborhood, East Boston, which had previously been kind of, more of a rundown, overlooked part of the city. Back then, you could buy, a condo in East Boston for a new construction condo in East Boston for $300 a square foot. Today, over $700 a square foot. So the growth.
Wish we had bought
crazy.
some back then. Huh?
Yeah, and some people did, and they're sin pretty today. So
wow. Okay, so you saw an opportunity, and really you had some experience in real estate a little bit in a different way, right? And you helped to expose you to this market, and even it sounds like you probably knew other people, that were making some money doing this, right? You were exposed to that, and it's like, well, wait a minute, why can't we go take advantage of that as well? And you all did. Would you speak to the first project, even maybe some lessons learned, and then let's move up to what you all are working on today?
Yeah. So this was a existing 2-family. I think Nick briefly touched on this, and is an existing 2-family house. Some people, call it a duplex. So it sat on a pretty big parcel of land. And this type of play is not really as common now because a lot of these have been gobbled up, but there was enough room that allowed for a bigger footprint within the zoning code, a bigger, a total additional square footage for the living area to fit there. And all, different cities have different sort of metrics regarding sort of density. How big compared to your parcel of land can your building be? Boston uses floor area ratio. So it's essentially just all your floors in a certain ratio compared to the lot size. So they have limits per zone. It might be 1.0. So you can have 100% of your parcel size you can have in your total floors. So this particular one was an existing 2-family. And Nick found this and figured out, okay, look, it's in a 3-family zone as well. So we could add a third unit and work within the FAR, floor area ratio requirements. So the way that project went down was it was as of right because of these things Nick found. We didn't have to go through the zoning process and get variances granted. So we added an additional foundation and gutted everything and turned it into 3 separate condominium units. And then, as Nick said, sold them to 3 homeowners. And during that process, we learned a few things. First of all, the plans were originally rejected. And Nick knew, because he had studied this and he was teaching me at the time, that this is completely as of right. They shouldn't be rejected. The architect designed this specifically to meet the code. So there was sort of a back and forth with the plans examiner at the city, who eventually conceded and said, you're right, this does work. So that was kind of lesson number 1. You can't just accept their determination. If you think you're right, you might know the zoning code better than them. So that was kind of lesson number 1. Lesson 2 was you go in conservatively with your projections, because in the end for this one, the market continued to go up, and we thought, okay, it's going to be a great project. And we ended up selling each condo for even more than we thought. And it really helped propel us into the next project, where we then did 7 units as opposed to 3 in the same neighborhood. So those, I think, are probably the 2 biggest takeaways. Mainly the first one, that you can't always trust the plans examiner.
That's awesome. I mean, so it sounded like y'all did you have the plan before you bought it to turn it into three units as opposed to 2, or was that just a plus or per?
That was the plan from the start. Yeah.
Okay. So you had a plan to increase the value by adding another unit. It sounds like sold them separately, but your challenge was, hey, the plans were rejected. Any more detail you can provide there on like making that happen, right? I mean, because I feel like many people, it would hear that it was been rejected and they just would have stopped there. Well, sorry, we can't do it, right? But obviously you all didn't stop there. What were some of the steps that you took to move forward with that, or to challenge it, like you said?
It was actually pretty intimidating for my first job. We decide, all right, we're going to jump in, we're going to take this risk, we're going to do a development project. And then suddenly it's supposed to be allowed by the code, and suddenly it's rejected. And I'm like, oh my God, what are we going to do? I still remember I was sitting in my car outside of the job site, and we had already gotten our demolition permit, but the problem was we couldn't get our building permit. So the job had started, but it was like, all right, we're going to demolish, part of this building, then we can't do anything. I was calling this guy. I was very nervous, but I had read that code inside and out. I had done my homework. I had done my due diligence. So I just kind of argued on my own behalf. I said, hey, and I was being very nice. This is another thing. When you're dealing with people who work for the government.
You said argued, and I was gonna ask you about that.
Right. It's not the right word. I had to modify that. I caught myself, because you got to kill them with kindness.
That's all right.
But you still have to push your own point forward. You can't be a pushover. So I literally just called the guy. I said, I'm reading it this way. Like the code says this here. You just read this sentence, see this. And the he's a nice guy. He just thinks he's doing his job. He probably just rejected it, not really paying that close attention, whatever. And I eventually, it took a couple calls, but I got him to just overturn it. And we've had several situations like that where people will say no. And it's not always just the zoning, people and at the city. It might be someone saying, oh, we can't finance this job. And then you go to someone else and you get a different answer. So it was definitely an early lesson on how you got to keep pushing. That something's right. You've done your homework. Push until you get the answer that you're looking for. Just be smart in how you push, obviously.
It's just a good reminder to all the listeners, I think, and myself, right? It's going to be discouraging, no doubt about it, but you just can't quit there. And that's going to happen so many times in this business. But I loved how you pointed out there's a lot of profits to be had if you're willing to overcome these barriers, right? And there's going to be barriers. It doesn't matter what business you're in or what type of real estate. The ones that are going to make it are going to be the ones that push through those barriers or those times you get knocked down, right? It just has to have to be persistent. So, shed some light now on the types of deals you're doing now.
Yeah, I could even do a little background. Since then, we rolled all our own profits in to the next project, and after that, and it took us probably a year or 2 after that to realize, all right, some of our peers who we kind of started with are doing 4 projects at once. Why are we only doing 1? Why do we have to wait till one's done to do the next one? And yeah, they're profitable and that's great, but you kind of run into the developer's dilemma of, okay, you could be building all this units and you have no cash on hand, or you're always strapped for the next requisition coming in from the loan draw. You see with guys who are building hundreds of units, and it's like, Well, you got to bring in investors. It kind of hit us then that we said, okay, this is kind of the path to doing that. So now what we're working on is we have several projects going at once. A 10-unit job we got entitled, again, in that neighborhood of East Boston, that same sort of area, different part of it with water views and stuff, and a 6-unit. Both of those we got entitled. We're working towards the permits on those. And one thing we've done is we've started marketing those to sell permitted. So we're going to sell the project off to someone else, make a nice profit without putting the shovel in the ground. And we also have our largest development project that we bought permitted. So we didn't have to take it through the zoning process. It was probably a 2 or 3 year entitlement process for the seller. So we bought it from him. We just closed on it. It's in Brighton, the 32-unit luxury condo development. And it's near, Harvard, MIT, near Fenway Park. It's a very nice development. It'll be our biggest by far, close to 50,000 square feet.
Happening on January 20th and 21st is Denver's biggest real estate event, the Next Big Thing. And it's shaking up how real estate professionals will define business success. This 2-day event will give you tools so you can catapult your own business. You'll discuss how the world is changing and what's needed to stay 2 steps ahead. Together with 450 other professionals, you will build a foundation to become the next big thing. Built on the foundation of helping others build wealth through real estate, the Ruth team has created the ultimate tool that is this event, and it's called the Next Big Thing. 25 speakers, including Ryan Serhant, Kenyon Salo, Nebu Hatta, Stacy Veeden, Brian Moses, Natalie Davis, and Ryan Avery. Register now at thenextbigthingcolorado.com and use the code RESS to get $150 off. That's awesome. It's interesting. It seems like most of us that get in that learn about real estate, early on, there's some point where a lot of us are like, well, how could I do bigger deals, right? Or how could I do more deals? And then eventually you learn about this thing we call syndication, right? How can I work with investors? How does all that work? So we can, do 4 projects instead of just one at a time. So you mentioned, though, you learned you had to bring in investors so you could do more than one project at once. Elaborate on that. Like that's something obviously that's so important in our business is how we work with investors, how we get in front of new investors, and especially early on, because that's another part of the business that's pretty intimidating, I think, for most early, especially if you haven't done a deal yet. It's difficult, getting started. How did you all bring in investors, and what was your thought process there or lessons learned?
So it was kind of a slow buildup, and then it just kind of started going a little more quickly in the past 1.5 2 years. Eric's parents invested, my brother-in-law invested, and then a guy who was the first, kind of not friends and family guy, but he's kind of our friend now. My wife's friend's friend. He wanted to invest in real estate, and he invested a good amount in a project a couple of years ago. And that kind of really got the ball rolling. Now we have kind of a website and an online presence. We have a lot of free educational content, just giving stuff out for free. And then some percent of those people might want to invest with us. The vast majority probably won't. They'll probably want to do it themselves, which is fine. But we've been kind of focusing more and more on that now. So we have a pretty good investor base, but it got started very slowly. And I would say it helped that from the beginning, we didn't, when we got into real estate, we didn't think about investors. That was, completely alien to us. First few projects, we didn't have investors. So we had already kind of built up a track record before we even had this idea of getting investors involved, which I think was very helpful.
No doubt about it. That's most people's issue, right? They don't have a track record, before they're trying to speak to investors. What were some lessons learned even around working with investors as that started to take off? Anything else that you could help the listener with as they're trying to maybe have those conversations right now with investors for maybe the first time?
Yeah, I think transparency is a big thing. You want to tell them kind of where you're at in the stage. One thing we do is we send out monthly updates in addition to, fielding any questions they have or phone calls or anything. We brought in another one of our closest friends to work with us and kind of interface with investors for the last over 2 years now. He's worked with us. He'll help, kind of find new investors, even find new deals, but he'll send out an update on all our projects every month to say, this is where we're at with this one, show maybe current renderings of where it's at if we're in an early design stage of the process. But really just say, look, this is the true expectation. It's development. It's not, we're not buying a turnkey property where we're going to pay you every month or every quarter. This is going to be sort of a long haul here. It's going to be a couple years, possibly, depending on the size. before you receive, kind of like a balloon payment, if you will. And so you got to make sure in our business, obviously it's different for other real estate investors and their business ventures. But for us, it's like 1 to 2 year process, so we got to make sure everyone's comfortable. They understand it could be a little while before they receive their payment. So it's really, it all comes down to kind of transparency, openness, showing, exactly where we're at in the process and making people comfortable that, okay, if it's a little delayed, no problem. This is why it's delayed. This is, what we're doing to, eliminate further delays, or if we're ahead of schedule, great. Everyone wants to hear that. So it's really just communication, transparency.
What's your best source right now for finding new investors?
I'd say right now, a lot of our investors are just repeat investors. But as I said, we've got kind of our online educational platform, and new people will kind of gradually trickle in. People will download, I wrote a book about condominium development and kind of how you can invest in developing and real estate, and people will download those. And every so often someone will sign up on our investor portal. They'll have to check off if they're accredited and fill out like a kind of a small form. So that's just kind of slowly been building. A lot of people are repeat, as I said, but new people are trickling in gradually as well.
What about, in this type of business, condominium development and what you all are focused on, how do you prepare for a downturn?
Well, it's one thing. I mean, it's tough to prepare for a downturn when you're selling units. It's certainly a bit tougher than when you're holding on to an asset that might be, if you're kind of in like the workforce housing, rental, you probably are going to be okay. Multifamily is pretty strong, but condos, it is a bit different. So the way we go into projects is we sort of have a very bottom line where we say, okay, look, this is what the market's at right now. This is what we think we'll get when we sell these. We won't assume, any appreciation, but it probably will happen based on the trends. Great. If it does, that's great. But what we really say is we look at the bottom line. What's the bottom line that this could work at? And if we see, okay, look, it's 20% less than what we're projecting, could still work and get, break even for everyone. That's pretty good. As Nick said at the beginning, I mean, Boston kind of shrugged off the 08, 09 situation and kind of continued as very strong real estate market up here, population boom, one of the life sciences aspects Nick was talking about. So we just go in conservatively. So like a big project like the Brighton one that I was talking about, our biggest one, we just look at that bottom line number. If we're doing a smaller project, same principle, but we might say, okay, look, could we maybe take this over? If there's investors involved, could we somehow make them whole and kind of, take it over ourselves and bear that, economic risk? And what's the bottom line there? So that's kind of the way we have to look at it for condo sales. If you're talking 1 or 2% price drop or very low difference to break even, that's probably pretty risky. If you're talking a major, a fifth of the price, a quarter of the price, typically you could probably withstand that then.
What about any predictions that you all have just for our real estate market, or maybe your market specifically, over the next 6 to 12 months?
I think Boston's in, particular, we're experts on our local market. Boston is going to keep growing. Drive in any cardinal direction, you'll see giant laboratory spaces being built. I did a lot of research on this. There's been grants awarded over the past 20 years for biotech and life science research. And kind of that's just now bearing fruit, and COVID has accelerated that. And we're right here in the heartland of where all that's going on. It's a booming industry. I'll give you an example. Our Brighton project, we're working with a broker who has been doing these luxury condominiums with a lot of life science or university workers that buy the condos at the end. Those are the buyers demographic. And he said when COVID started, there was a little bit of a dip because of the Chinese graduate students that had previously been a strong buyer demographic. And he said, in the past year, that's all been filled back in. We don't need them anymore. And they'll probably come back, and then there'll be increased demand just because the population growth is so strong. The Planning and Development Agency in Boston, they did a study a couple years back projecting what the population would be by 2030, and we've already surpassed it. So that can kind of give you an idea. We have faith that Boston will do well. In terms of the general situation, there's a lot of money out there in the economy right now. Federal Reserve is going to start tapering. We've seen a lot of cap rate compression, especially on those kind of vanilla value add apartment deals. We were actually looking in the Southeast, and we put a pause on it. And we're trying to look at kind of like office conversions and deals where we can add even more value, because we do think some of those properties are overvalued at this point.
What about some daily habits that you all have that have helped you achieve success?
That's a good question, and I think both of us have a similar personality. Not to speak for you, Nick, but I'm sure you'll agree that we begrudgingly created a lot of these habits. It wasn't our natural instinct. I think when we were younger, we were more like night owl type people and not really conforming to normal schedules. And at first, I think we thought, oh, this is okay for real estate. But once you kind of get deeper into it, you realize you have to have habits. So like one thing we try to do, I know both of us, is try to get as much done in the morning as possible. So wake up. You're going to have 1,000 emails, messages, all this stuff. Just try to ignore that till a certain time in the day, because, if you don't respond to an email right at 7:30 a.m. and you wait till noon, it's probably not a big deal. I mean, if the person really needs to get a hold of you, they'll just keep calling you. We've just started to learn from experience that it's like, what's the downside of doing that? If it makes your most productive time, email free and call free, you can get a ton of work done, research, whatever you're working on, content creation, till say 11 o'clock. That's something we try to do. Then we schedule our meetings sort of in the middle of the day, calls, which seem to, as I'm sure Whitney, it never really ends, the calls. All of a sudden you got 50 of them in one day for whatever reason. And then you kind of dive in, start responding to, emails or open queries. So that's kind of the structure and habits that we formed that help us. Now, in development, we have multiple jobs going at once. There's always fires to put out that you're not expecting in the morning one day, that all of a sudden, okay, we have this issue over here. You got to come to the job site ASAP. We got to figure this out. And hopefully that doesn't take up the whole day, but you got to be prepared for that too. So just have a good mindset. You never know what to expect when you wake up that day in our business, but really do as much as you can as far as content creation in the morning. Don't worry about your emails. Don't worry about getting back to people till sort of middle, second half of the day. That's kind of our habit.
That's great advice. And I have not always done that. But you're right. I mean, the emails, phone calls are never ending. I mean, they're always going to be there. And thankfully, and the listeners have heard me stress this, and I'm going to stress it again. You need a good assistant to help you with those emails. And you got to put in some processes and things in place so they can handle as many of those as possible. There's no way I could look at all the emails that I get every day. It's just, and that's would not be the best use of my time. So we have a system where she helps me to make sure that I see the ones that I need to respond to or see personally, right? Because majority of them she can take care of, especially as she gets better, knows me better. So I just encourage people to think about that. But such good advice, not turning your phone on or leaving it on airplane mode, when you first get up. Because it can just be like a train wreck, right? It just wrecks your morning. You see that email or maybe a little bit of bad news or something that's discouraging, or, and you're just not near as motivated to be productive, right? As if you had just waited. Such good advice. If you all had to pick one thing, though, that's contributed to your success, what would it be?
Combination of always trying to learn new things and being willing to dive in and just learn it as we go. We're doing affordable housing. We're doing condominium development. We buy rental properties. We're doing an office conversion, trying to learn about historic tax credits right now for that office conversion deal. We always try to learn new things where we can add additional value, put a new tool in our tool belt and keep kind of upping our game. And then we're not afraid to jump in and figure it out as we go along.
How do you like to give back?
We started this past year a nonprofit called the Lucky Puppy Society. And the goal behind that is fund surgeries, life-saving surgeries really for dogs that otherwise, the owner would not be able to afford and have to put the dog to sleep. So we grew up with dogs. We love dogs, have dogs. So it's kind of like, it seemed like a good fit. It seemed like there was a need for that. There wasn't, there's a lot of dog rescues out there and that type of thing, which are great. But this seems kind of like a niche that there was a need for. We had seen, these real situations in our lives and figured, look, a percentage of every unit we sell from the profits will go towards this cause. So that's kind of our most obvious main sort of way that we give back now.
That's a niche for sure. It's interesting and something you all connect to, and I'm sure many others will as well. Appreciate you sharing that. Well, Nick, Eric, I appreciate your time being on the show. I mean, you all have, and we talked about partnerships some, talked about, you all getting started and seeing the opportunity in the condominium market and making things happen, right? Even after your plans were rejected, but man, you were already knee deep in that project. Sounds like, and then it was rejected. I could just imagine some fear, right? You're that far into it, but then man, you did not give up. And I just congratulate you all on that, especially now, see where you're at now, what you're doing.
Thank you.
Incredible. So just grateful for you all sharing that story, encouraging myself and the listeners as well, and helping us to learn from you and your progress. Tell them how they can get in touch with you and learn about what you're up to.
Yeah, we're pretty active on Instagram at Winterspring Capital. And then just check out our website, https://winterspringcapital.com. Got a lot of good books on there. You can check out winterspringcapital.com/development-book. That goes through our condo development strategy if you're interested.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.